Sorry?
You can get started.
Sorry? Okay. All right, good afternoon, everyone. My name is Sanjay Patnaik. I'm the Director of the Center on Regulation of Markets here at Brookings. And it's a real pleasure to welcome a set of distinguished panelists here today for an event on a topic that I think is really, really important. Although when we look at the environmental space, oftentimes a lot of air is being taken up by climate change, rightfully so. There's another issue that is obviously super important, which is conservation and biodiversity. And especially the loss of biodiversity that we've been observing over the last couple of decades around the world, and the destruction of natural habitats. So today we're going to explore how can we use markets to better value nature and try to price the benefits of conservation, right? Because the traditional economic model basically means, let's say you have a tree, you cut down that tree, you sell the wood, you get economic benefits. If you let the tree stand, we don't have a good model to value this and to actually price it in through markets. And so this is at the core of the issue that we're going to debate today. And we have a really great slate of expert panelists here. We have two here and then two virtual that will pop on in a second. We first have Douglas Eger. He's the chairman and CEO of Intrinsic Exchange Group. Thank you, Doug, for being here.
Thank you much.
And we have Pushpam Kumar, who is the chief environmental economist and senior economic advisor of the UN Environment Program, or UNEP. Thank you, Pushpam. And then on screen, we have Kelly Shue, who is a professor of finance at Yale School of Management. Thanks, Kelly, for doing this. Good to see you. And Rich Stockdale, who is the managing director of Oxygen Conservation in the United Kingdom. Good to see you, Rich. So I want to start off with kind of like a little bit of the background of each panelist and how the work that you're doing really relates to conservation and what brought you there. Can you tell us a bit about your background at the work you're doing at the intersection of the environment, natural assets, and financial markets, and what specifically have you focused on? Maybe Pushpam, can you start? It would be great.
Yep, thanks, Sanjay, and it's really a pleasure to be here with you. As you said, I'm an economist, chief economist with UNEP. One of the overarching theme on which my team and myself work on is integrating nature into fiscal and monetary policies. And you can't do that until you value and account them. I mean, valuation, you can talk about whether the value should be through the market or through other process. One can debate and talk about it, but valuation is must. There should be some kind of value which is credible and acceptable to the stakeholders that must be brought into the picture in order to eliminate some kind of hedginess and uncertainty in the decision-making process. But I also do a lot of work on beyond GDP, climate finance, restoration finance, and basically thinking about nature-based solution to reorient the entire economy around nature. So that is what, and again, I have been in this business for last 30 years through my research, through action, agenda setting in the UN, and outreach and engagement. So I'm very happy to be here in Brookings Institutions.
Great, thank you so much. Kelly, how about you?
Sure. Thank you very much, Sanjay, for this opportunity to join such a distinguished panel and comment on this important issue. So I'm a professor of finance at the Yale School of Management. I normally do research on corporate finance and behavioral finance. I've been doing research on potentially counterproductive effects of sustainable investing as it is currently being implemented by a variety of divestment campaigns. And I came at this research mainly because I study what happens to firms when they're financially constrained and have difficulty accessing capital, and what happens when they're pushed toward bankruptcy. And what I found in my research is if ESG investors were to succeed in raising the cost of capital for brown firms and push them closer to bankruptcy, that could actually backfire in that it could make these types of firms more desperate to raise cash in the short term. And ways that they can do that is they could actually go out and pollute more or cut back on their investments in long-term green transition technologies. So overall, I would characterize myself as someone that cares deeply about effective ways to encourage companies to do better for the environment. I am, however, quite worried through my research findings that the current push toward divestment campaigns could actually be counterproductive. And I'm quite excited about this idea of natural asset companies and other ways to properly value these environmental benefits as a way to perhaps incentivize companies to do better, but more through a carrot approach rather than a punishment approach.
Great, very interesting. And you brought up natural asset companies, so let me turn right to you, Doug. That's a concept that you spearheaded. Can you talk a little bit about your own background and what brought you to this topic?
Sure. I really appreciate the opportunity to be here today and speak on this topic. You know, my pathway was, I've always cared deeply about nature, and it was something that, you know, I've always felt most comfortable being out in nature, exploring. It was my study, you know, it was kind of my religion and my joy. And I came into the business world. I studied environmental sciences in college and writing, and I thought I'd work for a conservation NGO out of college. Kind of came into the heart of a pretty bad recession, and the offers, you know, in the conservation world were, you know, if you could maybe work as a volunteer for 6 months, maybe we could give you a stipend, and then maybe there'd be a salary down the road a couple years from that. That wasn't in my financial program and capability. So I did a right turn and started a company. And part of the trajectory was my father had said to me, you know, I think until you understand how business and finance works, it's going to be very difficult for us to solve these problems. He said this in 1980. And so through a long trajectory of being involved in various startups, everything from seed capital to public companies, I developed the understanding of business, how incentives are created, the financial markets, and culminated in buying a conservation property upstate New York, which was both wonderful and it was kind of an existential crisis, because I realized even with, you know, Ted Turner's or all the money in, you know, philanthropy in the world, it wasn't enough. We couldn't conserve our way to, you know, natural capital prosperity. So I thought, well, I would, you know, took a stint into film and television, and I thought I would do a documentary about natural capital and kind of bring the awareness of why we should be investing in natural infrastructure. And during the process of that, they said, one, it's a terribly complex idea. You know, this is not going to be understood generally. But I said, perhaps what we should do is think about how to solve it. And that led to creating the Intrinsic Exchange Group. And we're looking to create a new asset class that's tradable based on nature itself.
Great, wonderful. That's super interesting. Rich, last but not least, you are deep in conservation. So what is your perspective? How did you get there?
So it's really interesting. My background is half data science, half conservation. And I learned through a rather fortuitous route through my career that Doug's father was right. So I came out of academia, went to work in government, but realized the solution to the problems we face on the planet are going to be driven by business. So a little over 3 years ago, I started Oxygen Conservation. And in that time, we've bought 10 estates across the UK, all for conservation, but with a commercial mindset. And natural capital is the key positive fuel to drive that forward. We're trying to demonstrate that it's possible to focus on positive environmental and social impact and deliver a profit as a result of what you do, not the purpose. So in many ways, we are the deal originator, developer, and operator for all the ideas the amazing panel in front of you are going to talk about today. So I'll be able to add a bit more reality of dealing with some of these challenges and logistical problems as you become the owner and the custodian of these incredible places.
Great, wonderful. So just to set some of the basic information right, it would be great to learn about some of the kind of like, what are the foundations of what we're talking about. So I want to turn to you, Pushpam. Without getting maybe too much into technical details, can you let us know what are ecosystem services, right? And what are the tangible ways that humans benefit from them?
See, any benefits or the values which society harvests from the nature, whether it is forest, like wood, non-timber forest products or non-wood forest products, carbon sequestration, hydrological services. In many parts of the world, water availability is through the hydrological functions of the forest ecosystems. Similarly, you have freshwater ecosystem. All the fish, part of the fish come from the marine and ocean ecosystem, but part comes from the freshwater ecosystems or wetlands. So any benefits which you get from nature is called ecosystem service. But then it should come as a result of your effort. Something, to an economist, things have been coming or flowing in the nature without our efforts too. But as a result of our effort, whatever benefits we are able to harvest, they are called ecosystem services. Millennium Ecosystem Assessment and subsequently IPBES, which is an intergovernmental process, came out with 12 types of ecosystem, and each of the ecosystem provide 4 types of ecosystem services, what we call provisioning services like fish, wood, then regulating hydrological flow or carbon sequestration, supporting services like soil formations. I hope it is not too technical, but these are the services. But in terms of all these services require investment that must be kept in mind. They are not free bounty of nature or free gift of nature as John Stuart Mill or David Ricardo in 19th century or early 19th century they used to say. They require investment. They are just like any other economic goods or services. So these are the services when we talk about ecosystem services we refer to.
Great, that's very helpful. And economics is a discipline that has had quite some tradition of trying to put some monetary value on nature. Can you talk a little bit about the history? What progress have we made? Kind of like what is still there to explore?
That's a very good question, but it requires a very long answer. I mean, but anyway, I won't be long. See, whenever you have the trade-offs or scarcity, that has economic value. Like land, in 18th century, for example, it was in abundance, certainly in this part of the world, but even when we have very large population, land was treated as a free gift of nature. But can you call them as free gift of nature anymore? Probably not. Similarly, fish stock or carrying capacity, atmosphere, they are economic goods. Now, our needs, the demand from society is that we need road, we need buildings, we need schools, we need colleges. Sure, we need them. And we need them, then you start interfering with nature. You cut the forest, you gave the example. Sometimes you over-harvest the fish stock, you pump carbon into atmosphere, you dump solid waste into soil and water, and plastics not to, and one can go on. So there is a trade-offs. I mean, you need both. You need nature, but you also need the normal non-nature goods in order to have good education, good transportation. And as you can see that in last 75 years, if you start since 1950, the population has gone up by 5 times, but GDP has gone up by 15 times. So basically, there is a 3 times increase in GDP per capita. Again, this is for the entire world. And for some countries, it must be much more than what I'm saying, like maybe 10 times. So there is, but what has happened in the process? Mangrove, if you know mangrove, what it is, mangrove has gone down by half. Wow. Right. Forests, we know that we have destroyed significantly. We are pumping 6 billion tons of carbon every year into atmosphere. And we are in a situation where Paris Agreement 1.5, we are not going to be within that limit. Most probably we will be 2.1 if we are lucky, or we are going to touch 3 degrees Celsius. Pollution, not only PM 2.5 or plastic, but 7% of GDP is lost every year because of the pollutions. And today, the number of people dying due to pollution is much more than terror, earthquakes, tsunami, or any natural calamities. So there is a problem. Now, going back, if you have this kind of trade-offs, you need to organize those trade-offs and resolve them. And that is where monetary valuation comes into picture. Going back to the history, the first time the person who did the monetary valuation was in 1890 in Stockholm, Wicksell. And Wicksell did the valuation of park. The idea was that public good should be, the benefits should be taxed. How much taxation? Valuation will tell you. Similarly, there are a lot of talk about payment for ecosystem services, PES, or compensation for ecosystem damage. India, for example, in last 20 years, they have saved $18 billion. They call CAMPA, Compensatory Afforestation Program. Yeah, and although they don't know how to use this money right now, but the money is lying. Because a lot of construction company, they have destroyed the forest, the road building company. So there was a rule that, okay, you can do that, but then you have to deposit the money as a compensation. So the money is there, but how to use that money, because there is no rule existing. So Parliament has to come out with some kind of legal framework to use that money. And in various parts of the world, in South America, in Sub-Saharan Africa, in part of China, there is a kind of payment for ecosystem services. How you do that? Unless you know how much is the worth of the resource. Otherwise, beneficiary and providers will not agree. So monetary valuation helps. Also in the cost-benefit analysis, to make it more comprehensive, both benefits and cost, you need valuations. And for accounting, in order to integrate the physical accounts with the monetary accounts, you are not going to add 2,000 snakes and 3,000 tigers and 2 elephants. I mean, you need some kind of common numeraire, and that is where the monetary valuation comes in the picture. And I think in all the big countries, I can think about the cost-benefit rule here, in US, EPA, Green Book, in UK, in Australia, in all OECD countries, there is a guidelines how to value nature and natural capital. Not to mention, since I come from United Nations, the SIA, the system of environment and economic accounts, SIA talks about it, how to value. But they are more on physical side. However, there is a provision for valuation. Unless we value a lot of policies emanating from fiscal and monetary realm cannot be realized. So there is I can go on. There are some evidences of good valuation, bad valuation, abuse and misuse of economic science, but that I can come in the next round probably.
Great, thank you. This was a very comprehensive overview. Let me kind of do a round across the panelists, maybe starting with you, Kelly. When you look at like these natural assets, right, and nature, what are the benefits of trying to incorporate the value of nature and of pricing the intrinsic value of nature into markets? And how could that help with conservation?
I think it could potentially solve a major valuation problem. The way I see it is governments already are offering incentives in the form of carbon credits or a payment for ecosystem services, basically. They're offering these incentives so that current set of owners of natural assets can be financially rewarded for using those assets in a sustainable way. However, there could still be a market breakdown because let's suppose I'm an individual owner of a natural asset. I basically face a choice. which is I could sell that asset now to someone else, maybe a company, and they're going to perhaps use it in an unsustainable way. Or I could keep the asset myself, and essentially collect potential future carbon credits or other, payment for ecosystem services. But I'm an individual. I don't know the risks associated with how those carbon credits are going to change. I can't properly value them. And therefore, I might be more inclined to sell it to somebody else because I can't properly value that myself. If I instead have the option to instead sell my assets to another group of sustainability-minded investors, what they can do is they can come up with a market price adjusted for the risk of this flow of potential carbon credits or payment for ecosystem services. I imagine there's going to be lots of roadblocks on the way. There are risks with this. We all know that carbon credits can potentially be abused. But I do see this as an opportunity for a market mechanism to price this risk rather than having it be borne by the individual asset owner who is perhaps much less sophisticated and able to handle this amount of undiversified risk.
Great, thank you. Doug, the same question to you.
Yeah, I think I might almost flip it and say, what do we have as a result of not having nature in markets? So if I think about, imagine, I think you mentioned we've lost like 50% of nature in 20 years. If we'd had GDP reduced by 50% over 20 years, what the reaction would be. We see inflation or a tick up in interest rates, there's an immediate reaction to those. No. And so I look at it from two sides. One, there needs to be capital formation into nature. And what Kelly was saying is exactly right. If I can't price that asset I'm holding, or an investor can't realize a return from it, then it's very difficult. So we've been living with a policy-based approach. It's either taxes, regulation, and artificial markets, which are an outcome of that. Yeah. And then we expect, if that's not enough, philanthropy can fill the void. And that hasn't been enough. So we're looking at a huge deficit. I think it's been estimated $600 to $800 billion a year in, just biodiversity. Climate, the estimates have been 3 to 5 trillion a year. If we're going to move to a more circular, sustainable economy, it's probably orders of magnitude more. Mm-hmm. So, there's just so much wealth we can transfer from one entity in the economy to the other before there's resistance to it. So I think being able to price nature in markets and make it an investable, proposition and a business case for it, then we'll start to look at that and say, hey, we want to build more nature, mm-hmm. rather than simply extract from it.
Oh, that's a very interesting point. Rich, over to you.
The absence of a price on carbon is the cause of climate change. The absence of a price on water quality is why sewerage companies in this country can just pump human effluent into rivers. There is no price penalty for putting plastic in the environment. That's the reason why. It's absolutely as simple as that. We have to try the alternative. It is only by putting that monetary mechanism and representing value in a meaningful way that we can actually take a step forward. Doug touched on philanthropy there. It's wonderful. We've got some great charities, some great organizations that are doing all they can. It's time business and the rest of us stepped up and helped, because philanthropy is not enough. Often in these conversations, you get asked about the risks and the worries around market mechanisms. The reality is the vast majority of those are moral aversions. They're worry about things changing, or they're about bad market operators. They're the exact risks that relate to everything to do with the market, but the market figures it out, and we need to do that from an environmental, a carbon, a nature, and a biodiversity perspective.
So let me follow up a little bit on this, because you mentioned philanthropy and government, right? How would conservation through financial markets be different from those efforts? And how could they be set up complementary?
For those people that have worked in the NGO space, or the public sector, as we call it over here, consequences don't matter. Performance doesn't matter. It's a high-level elite football game without anyone keeping the score. There's no teeth. Until you put a profit, a loss, a consequence, a value on it, you can't create a performance culture. There's no urgency, there's no immediacy, there's no demand to deliver change and positivity. The systems and processes that venture capitalists and new investments bring and demand will see the change that's required. To illustrate that from a UK context, the Amazing Wildlife Trust organisation would buy 2,000 to 5,000 acres a year and celebrate that fact. And they're amazing people and a brilliant organisation. In a similar amount of time, we bought 5 times that much land, because we took a private sector-based approach that prioritized systems and processes and developing how we worked. And as a result, we were able to attract the brightest minds working in this field. We've seen a pivot in the UK right now that working in the environmental sector is attracting people that would have worked in investment banks and would have worked in hedge funds. They want to be in the environmental space now. We're a small startup with 30 people in the company. We have over 100 applicants for every role. We've got big corporate land managers asking us, can we help them recruit? Because they can't create that authentic push, that excitement, that desire to be the sort of change that we want to see in the world.
Wow, that's very interesting. Kelly, same question for you. I mean, you're a financial market expert. How could conservation through financial markets be different or complementary to government and philanthropy?
Again, I would say it seems like the government is already providing some financial incentives to use natural assets sustainably. And I think those incentives are only going to increase in value once the threat of global climate change further increases and becomes more salient. What I'm worried about is without kind of public market pricing, that these financial incentives already provided by the government are going to be undervalued because they're thought to be risky, speculative, and far out into the future. So any kind of undiversified owner is going to undervalue them. I would say the other benefit is I like how this is moving in the opposite direction of a different part of the sustainable finance space, which is through divestment campaigns. I've always been rather critical of divestment campaigns because if divestment basically means that the people who care most about the environment are selling their claims to fossil fuel assets and other high polluting assets, okay? And if we sell our ownership claim to those assets, it's not as though they disappear. They just transfer in ownership, and they're then owned by someone who potentially cares less about their environmental impact. Whereas what we're talking about here is really the opposite of divestment. It allows for investors with sustainable preferences to maintain ownership in natural assets and control how they are used. So it places control back into the set of investors that we want to own the assets.
That's very interesting. And Doug, you also mentioned that earlier, right? Like, did you think that what the government is doing is not enough, the philanthropy is not enough? How do you see these three playing with each other, complementing each other?
Yeah, I think
big different.
Yeah, it comes down to exactly that incentive and the way we've built an economy, to create wealth. And so if we look at what government can do and philanthropy, it's a transfer. And if we're going to get investors interested in directly investing in nature, in climate solutions, that's where the investment has to go. It's not doing less bad. It's doing direct good. And so in that the opportunity here is enormous. And we've had this discussion with hundreds of investors. And we're looking at something on the order of nature's producing goods and services worth over $100 trillion a year. We're instead of including that into our economy, we've excluded that. And then we're damaging, I've just heard a figure, pollution's 7% degradation to GDP. There was some recent research that the lack of natural infrastructure was about 2 to 6%, depending on developed or less developed economies, because it's a drag on the ability for us to produce goods and services. So it's raising the cost. So on one side, we're damaging the current economy while ignoring something that's of the same size. And so if we can bring that in and make the case, which when we talk to investors, they're saying, we're growing a little tired of not having impact. And I thought when we brought forward the case for investing directly in nature, that it would be those with a sustainability mandate, with an impact mandate. It was those that actually didn't. They'd go, we think natural capital is a thing. We think this is going to be a space in the future. We need to see it at capital market scale, but it's, you know, pure optionality. It's not just negative screening. And so, you know, I was talking to one very large investment manager, and he made kind of a, you know, a joke, and he said, I never knew I was an impact investor, I buy Apple. And what he meant by that was, I don't have the ability to directly invest in nature, and if I take out those negative screens, everybody's investing the same things because they need a market rate of return. But it's not necessarily related to investing in nature and natural capital.
That's very interesting. So then let me ask you, like Pushpam, I want to turn to you. When we look at markets right now, right, and the value of nature, why do markets actually fail in valuing nature?
So, no, thanks. I mean, market fails, and all the classic case of market failure given by Bader 1954 applies to the issues of climate, biodiversity, and pollution. That number one, the tools of market cannot be applied. Sometimes you can apply, but you get the perverse result. Sometimes you don't get any result. And sometimes whatever result you get, it is not socially acceptable. So in all those cases, market fails because market cannot capture the benefits of nature. Here, one, you know, I will digress, you know, for a minute. We should not treat nature as if they are something exotic, scenic beauty, or, you know, so, okay, we have done everything, now nature is also important. That approach is not correct. In large part of the world, may not be here, the people, and especially the people, 896 million, whose per capita income is not even $2.1 a day. They directly depend upon the benefits coming from nature for their livelihood, for their life, for their medicine, for their recreation, everything. So, I mean, not only those poor people, but in general, Homo sapiens are embedded in nature. So it is not that something we have left, now let's include them. We cannot do without nature. So that is one part we have to keep in mind. When we value them, I mean, let's take three things. Climate, we are not going to reach one, I mean, we have talked about it, that 1.5 degrees Celsius as agreed in Paris. Every year, around 1 million species are under the risk of extinction coming from IPBES. Now, what is that species we are talking? This is part of biodiversity. Of course, biodiversity goes from DNA to molecule to biomes level, but if they shrink more and more, we become more vulnerable. You have seen what has happened to pandemic. As of now, $15 trillion, this is from IMF, has gone on recovery program due to COVID-19. That was not the last pandemic. Be ready for more. If climate change happens, if we fragment the habitat of the other species, if those species are under the risk of extinction, wetland is shrinking, the mangrove is shrinking, be ready for vector-borne disease. And it will not only happen in Africa like Ebola or Zika. More and more diseases would come. So what I'm trying to, my idea is not to intimidate people, but recognize that we depend upon nature. Now going back to the question, so the market failure happens. So there are 3-4 types of ecosystem goods and services which we can capture and bring into the discourse of you know, the development and the implementation. One is the, you know, produced capital, like, you know, forest, wood, I mean, they are easy to capture because there is a transaction price, there is an exchange price existing from the existing market. So that we can easily do. Second is the more regulating hydrological services, the carbon. There you will have to go on non-market methods or constructed market or psychometric techniques. But please remember that even if we use non-market method or market method, there are some side effects, what we call externalities. They are not captured by the conventional market. So in order to make it credible, comprehensive, and inclusive, we will always have to supplement that market price, what some economists would call it accounting price or the shadow price. That is the way to capture the contribution of nature, which will be accepted by the different stakeholders. So market fails, yes, that is a good recognition that market fails in this case. But then there are ways to complement that and capture the missing markets and the missing role which conventional economics and their paradigm fails to recognize. And finally, we are embedded in nature. A lot of people, for their various needs, depend. And moreover, if we really want to reorientate 193 countries, 7.5 billion people with different aspirations and expectations and ambitions, then you have to keep nature in the center. Only then we can think about sustainability and well-being of the maximum number of people. Of course, business firms have a role to play here, and good that all the tools and approaches which Kelly was mentioning, or Doug, you were mentioning, or Rich was saying, that should be taken help of, but we have to shift the compass, the way we measure progress and sustainability. So that is the point we must keep in mind.
Great, really interesting points. And so I think when we look at the heart of the problem, which a lot of you already alluded to, is that we have kind of like a tension here, right? When I'm a regular investor, I invest into capital, I get a rate of return, right? But nature doesn't really have a direct rate of return, a direct payment. So how do you overcome that difference and that tension? Rich, let's start with you.
So the two principal vehicles we have here in the UK are the carbon code side of things, so the woodland carbon code and the peatland code, which is a recognised mechanism to produce monitored, verified and reported credits that come from that. Literally this year alone, we've had the first steps forward to where it's called over here biodiversity net gain. So a nature-based credit system that requires the developer of new built property and later this year larger infrastructure projects to demonstrate a 10% uplift in the biodiversity value of a landscape. Now this goes to Kelly's point earlier on. For a private individual landowner, this is virtually impossible. This requires you to have a three-way legal agreement with a developer and an intermediary that will sell those credits for you. And the system and process for calculating the numerical value in a changing biodiversity are eye-wateringly complex. You need to be a skilled environmental economist to do it. But it is a huge step forward and shows how the government have started to put some values in terms of carbon and latterly nature in the UK. The tool we've applied to make this possible, because each of those markets is very early and is beginning to develop, we've looked at land and conservation across a suite of returns. So we acquire land for conservation, so that is buying that initial capital outlet to acquire a landscape. So we view that to go up over the years. So we have a marked return of land value uplift over time. We then predict forward for our carbon credits and biodiversity credits. But we've also started to integrate, and there's a compromise to each of these measures to provide investors with a return. So at our larger estates, we look at renewable energy in a small amount of the estate. We also integrate the built environment alongside the natural environment. So across the 10 estates we've bought, we have 120 buildings, and they provide homes for local people, places for employment and things like that. And we also integrate at a small scale regenerative agriculture. So at a portfolio level, you have a range of different revenue sources that come at different timings and allow investors to start feeling a return as those natural capital markets, the carbon and the biodiversity, begin to develop.
That's very interesting. So you really take a holistic approach, but your main rate of return relies on kind of like these credits that are being issued based on the land once those markets develop.
So the underlying element is land value uplift.
Okay.
In the UK at the moment, we're seeing somewhere between 5 and 10% a year increase in land value. So that gives you your core underpinning. Above there, you have your credit-based system. Yeah.
That's interesting. Kelly, how about you? How do you see this tension being overcome? That like you need a return if you're an investor, and nature doesn't provide direct returns in many cases.
Well, I think if investors are sophisticated, then there's not much of a problem because today's market price is going to reflect their expectation of future land credits and other sustainable revenues from this holding, right? So if they really thought that that was zero, then today's market price of the natural asset as traded on the market would also be zero. So they're not going to lose any money. I expect it'll probably trade at a positive price, and it's because they're expecting some future revenue stream, and they'll price the current level of the price such that they earn an appropriate return, both to compensate them for that investment, and it's also possible that they might accept a below market level of return because they also feel good about what they're doing. So, for example, I can imagine a natural asset price in the market at above its fundamental value of future discounted revenue stream from carbon credits, et cetera. And it's because there's a group of investors essentially want to subsidize this type of endeavor. So again, I don't think it's a problem if we think of investors as fairly sophisticated. I do think a risk is that some of these investors may not be that sophisticated. So they might imagine very high returns that they're not going to earn in any realistic sense. My background is in behavioral finance, so I don't have like a blind faith in financial markets. All right, although I generally think they're the best mechanism. So there is, I think, some worry about appropriately describing the risks of these investments to investors so that they don't view this as some kind of speculative venture, and they don't invest in a way that really exposes them to huge losses.
That's actually very interesting. And so I want to turn to you, Doug, because you have thought about this a lot, right? Especially with the concept of natural asset companies. How do you think about that tension and about generating returns for investors?
Yeah, I think we're still relying a lot. It's better to think about carbon markets and biodiversity credits and other things, but those require a mandate or, again, philanthropy, either corporate, governmental, or on a personal level. Most investors have a fiduciary responsibility to get a market rate of return. So when you talk to the asset managers and they're saying, we're really prohibited from taking a less than market rate of return. And so you have to look at, can I realize that in a relatively short period of time for my financial performance? So I think what we're wanting to do is go beyond limited credits and offsets to a direct investment in nature and have different metrics for driving that investment forward. So we've been thinking of current and future cash flow as the only way to look at a corporate equity. And, that's fine. That worked great when we didn't have this problem of nature being externalized from the mainstream of the economy. So we're going to wait until it's all priced in, we have some future value, or in many ways, we're playing a scarcity game. If we think land values are going up, it's largely because there's more demand on that land, right? And the highest level of demand will come from higher levels of return of development. And then you're asking those developers in that scheme to say, okay, I'll take some of the profits from the damage I've done and put it over here to do conservation work. Where we really need to be flipping this to say, how do we incentivize folks like Rich and his investor base to say, I want to invest in natural capital, it's production of ecosystem services. So we really, finance is an agreement to agree. Between a willing buyer and seller, the underlying becomes true. And if we can say, this is the value equation to investors, this is how you can get a financial return. Not all assets produce cash flow.
Right.
So if we can bring the right structures to market and provide that information with the ability to value these assets and bring that together, I think there are plenty of willing buyers of natural assets. if they can go at this with getting a market rate of return or the potential of it. They'll take risk.
How would that return be generated? Let's say I'm an investor, right? I love like a piece of forest somewhere, and I think this should be like a natural asset,
right,
and I want to invest in that. What kind of rate of return? Would it be depending on the eco-services that kind of like that come out of that, or the land valuation if it increases?
Yeah, so what we've been working on is this, that we needed a new type of company. I don't know if I'm jumping ahead too much, but
no, we'll get back to that later. Yeah, but
say that if we can create an asset class based on nature producing ecosystem services, and we can value those and price that, whether there's an option value that they're priced in markets in the future or not, then there is a way that we can get an investor to get a rate of return. There are companies that do not provide cash dividends and haven't for a long period of time.
Yeah.
So the totality is the buying and selling of that equity related to the underlying performance. So if you think about what do we have? We have plant and equipment and geology. We have nature as a workforce producing goods and services of a quantifiable value and also an existence value. And if you buy and sell that in an equity structure, you're pricing that natural asset.
That's very, very interesting. And so I want to go back to something what Kelly said. You talked a little bit about kind of like the potential risks of a market-based approach, and like some investors might not be completely understanding this. So Pushpam, what risks do you see with a market-based approach of valuing nature?
Yeah, but I would like to go to the previous question before I answer this question. There is enough evidence that restoration, conservation, or protection of nature yields a lot of benefits. I mean, you take land degradation, 42% of land in Africa is degraded. Of course, on a severe to moderate scale, but they are degraded. The situation is in Amazonia is not very different. So is in South Asia. And I have directed a study for 41 countries of Africa and 44 of Asia. And what we have done, that cost of action versus benefit of action. So if you don't do anything, how much you lose, and if you do something, how much investment it requires. And in all cases, the benefit cost ratio is more than 30 times.
Wow.
So that is from land degradation. You have seen Nick Stern has produced for the climate change, that 5% of GDP, action requires 5% of GDP, but if you don't act, it costs you 20% of GDP. That was Nick Stern long back, 2006. For biodiversity, there are plenty of studies showing that cost of action is much higher, cost of inaction, cost of not doing anything, is much higher than the cost of action. So from biodiversity, similarly for pollution, biodiversity, climate, land degradation, there are enough evidence that there are huge economic returns if investment goes into that area from various parts of the world. So there is no problem on that. But why investment is not coming, that we have to, I think, Kelly, you are the expert of behavioral investment. What is happening in the mind of investor that they are not able to recognize these benefits? Now, that this kind of panel can talk about, and going back to this, that how the contribution of nature valued through the market, right? I mean, market should be supplemented by other information. Market alone, if they can take care of the problem, where was the problem? I mean, then there was no problem. I mean, David Ricardo talks that, land become scarce and scarce, but market, the rent will go up and up and up, and then the people will be compelled to conserve the land and the productive quality of the land. That has not happened. I mean, in various parts of since 1932, when Jack White wrote the book, The Rape of the Earth, you have seen what is happening. And in this year, 2024, when we are talking about this right now, biodiversity and nature, 200 member states in Kenya, in Nairobi, in UNEP, they are discussing that what should be the way to conserve nature and how market can help. In 3 weeks from now, World Environment Day on 5th of June, the theme is restoration, and there's a lot of talk about restoration finance. So they are saying that there is a lot of evidence that restoration will yield benefit. Why private sector and governments altogether, they are not recognizing these benefits. UNCCD, I don't know how many of you have heard about this convention. UN Convention to Combat Desertification is meeting in September in Saudi Arabia, Riyadh, to discuss that how to bring finance into restoration. In Cali, Colombia, they are discussing the same thing by the end of this year, and not to mention General Assembly in 3rd week of September in New York, where member states would come and discuss several other things, including restoration finance. So there is not, I won't say tension, but people know that there is enough evidence where benefits are being generated as a result of investments in restoration activities, whether they are in biodiversity or land or climate. But how to entice private sector, that remains a challenge. Probably one of the things could be that we need to change our language, the kind of lexicography we are using. Still, the economists are, I always say, and I'm one of them, we are bad communicators. The way we communicate our problem to the decision maker is not good. We need economists with confidence and clarity. That is not happening. We always go on the one hand, on the other, and then we lose the, I always say that if you have 10 minutes with a president of a head of a state or the prime minister, and you will say, okay, we need to value nature, we account them. There are methods on the one hand, but on the other, and then you lose them. Because the same guy is dealing with ethnic violence, earthquake, drought, recession, and then one economist comes about valuing the nature and talks about on the one hand, on the other, there are methods, however there is uncertainty, and then you lose him. So we need to organize ourselves. We need to be confident. I'm not saying go and talk to him flatly wrong something, no. But there should be a simplicity in the message, a clarity and confidence, and we have chance to succeed.
That's a very interesting point. And probably can apply to a lot of other topics too. Rich, to you a little bit, do you see any risks with the market-based approach? And the approach that you guys are taking?
Yeah, can I just come back to that previous point? Because I thought it was perfect. The environment sector has a marketing problem. We keep telling people we've destroyed the planet, we've polluted it. Everybody knows. We keep no one needs to be told anymore that it's an economic case to do the right thing for the planet. But the problem is the proximity to that cost is too far away, especially in the Western world, whereby the threats and the realities of climate change are not being felt as readily by us. In the UK, lots of people are talking about how the weather's better as a result of climate change, and it's going to get warmer. We're not seeing the hard side of this. The environment sector is still viewed as the purview of the retiree and a person on a Sunday planting a tree. It's not sexy. It's not exciting. It's not aspirational enough. We need to stop talking to people about the economics. The market mechanisms need to happen there. We need to see the same leap forward in the way it's viewed as Tesla made in electric vehicles or Google made in search. We need to let all those mechanisms and infrastructure and all the technical bits that need to happen in the background go there, but it needs to be aspirational, exciting, and draw people in to want that. And the other reality is, until we are there, we do have to provide people with a market equivalent return. Otherwise, they just won't come yet, because they have, as Doug says, that fiduciary responsibility. You can get a room full of people really wanting to do what you do, but they're not paid to maximize profit, these people. They're paid to manage risk and not step into something bold and new. We're starting to see people do that, but until we get absolute certainty in these markets, which are 10 or 20 years away. I wrote a piece recently reflecting the state of natural capital markets through the lens of the growth of the internet. In the world of internet time, we're still in the 1990s. Google hasn't arrived yet. There isn't an iPhone. Social media is not even a thing. Let's not think about that. We're so early in terms of its development, but it's got to come. We've got to give people that market return first to get them to mobilize that money. No one wants to be last or first. So as soon as we get it deployed, we'll start building and moving forward. You asked me about risks, and I think they're all really overplayed. The best one I've ever heard is Kelly's point earlier about the perverse incentivization that can push businesses too hard and end up causing bad behavior. Outside of that, all people ever talk about is it's immoral to put a market mechanism on nature because nature should be priceless, or there'll be bad operators selling bad carbon credits and doing the wrong thing to nature first to uplift that. That's not a problem inherent with or limited purely to the environment sector. Every product, every good or services, you can buy a high quality one or a terrible one. And that's just something we all have to be responsible for, that when we do choose to buy a natural capital product in a market, we buy one that's authentic, real, true, and doing positive things for people and wildlife.
I think you bring up a really good point. You also hear that criticism oftentimes about carbon markets and emissions trading, even though those are the most efficient ways to reduce emissions. And so this is a lot of ideological skepticism, I think. Doug, the same question to you, and you have thought really deeply about this. What risks do you see with a market-based approach?
I totally agree with Rich that the risks are overblown. There is this feeling that we shouldn't value nature in monetary terms, but I often say to my friends, we dream in green, but we live our lives in the red and black of our financial statements at the family level, at the corporate level, and the governmental level. And until that changes, and the connection can either be friction, it's more costly for me to do something, or my incentive, which drives a lot more people, turns in the other direction. I think the other thing is incomplete markets with incomplete information. So if we've been very fragmented and siloed. We say, okay, we're going to solve for carbon, or we're going to solve for this. Nature is a system, and we live within that system. Yeah. And until we look at the totality of those ecosystems and how we fit into it, how we produce goods and services, you can get perverse results. Just like with Kelly's example, which I thought was great, you may think putting friction into the system is a good thing, but look what happens. It may incentivize people to accelerate. They're doing bad. Yeah. So I think we need to flip this and say, what are the risks of not doing something? And I think they're much larger.
And I think what I really liked about some of your comments, especially combined with yours, is that nature should not be something separate, right? I mean, look at systems where nature has collapsed. Most other economic activity collapses as well, right? Because you don't have agriculture, you don't have healthy water, clean air. People can't work as productively as they are used to because they are not healthy. And so I think that's something that really is important. The point that you made earlier, we need to put nature at the center again, because it is really the basis for every other economic activity. Without nature, most other economic activity ceases to exist. And so I want to go back to you, Doug. And so you spearheaded the idea of a natural asset company, right? Can you tell us a little bit about how it works? What is the concept behind it? How would you provide financial benefits? How do you see it playing in the market?
Sure. So what we've been working on is a new type of corporation, a natural asset company. And what it's designed to do is incorporate the value of nature into the mainstream of the economy. So a natural asset company is chartered to protect and to grow the value of natural assets that are under its management. And that can be in a conservation, restoration, within our agricultural system, mixed landscapes. So looking at nature as that, intrinsic existence value, its productive value, and option value, that its values can be priced in markets in the future, and that it underpins our entire economy. So the core notion here is a natural asset company. Let's say we're looking at a forest, and it would say, what are the ecosystem services produced under that? The ecological attributes would be licensed into that natural asset company. And we created a two-part financial statement for natural asset companies, where if it's monetized, GAAP, IFRS, you report it as such. But we were working with, and you mentioned the UNCEA framework, and we took that with its 38 ecosystem services, made it fit for purpose for reporting on a corporation. So on the second part of your financial statement would be the flow of think of it as nature's income statement. So what's the value of the ecosystem services produced? What's the asset worth that produces that? And what's the condition of that asset and its likelihood to continue to produce those goods and services into the future? And so if you think about what we're trying to do, if we're going to value that underlying asset and actively manage it, because I agreed, with the comments earlier that this is our active management. We need to be looking at those production of ecosystem services like any other goods or service, but they're externalized at this moment. So we posited the idea that you could take the value of those ecological attributes, these ecosystem services and natural assets, the beneficial ownership of that. And if that value can be quantified and incorporated into first the share capital value, that share capital is then traded in a market, private or public, you're converting the underlying asset value into financial capital. And if we have metrics, not only price to earnings, price to revenue, book value, we can look at that as price to ecosystem services and other known ways. And like a company that doesn't produce cash flow, an investor can say, I know the condition of the assets that I have a claim on through this natural asset company equity, then that can appreciate. So this can come to the capital markets and allow you to make a direct investment in nature, see a financial statement that gives you not only the value of kind of the current economy, but nature's economy, and you can invest directly in it. So we've been road testing that with literally hundreds of investors, with potential issuers, and say, hey, be it a government that wants to meet their 30 by 30 goals, or a corporation that wants to change their supply chain to a more sustainable product or regenerative agriculture, there's a missing ability to connect directly to the investment with the need. And so we have investors that have said, we're very interested in investing in natural capital. We need a vehicle at market scale. So when we're with our investment banking partners, they're always asked, like, where's the product? And, this idea of that, we're going to turn to, the capital markets for this. If there isn't a product that can be done, you're not going to get private capital to come in.
No.
And we're back in that same process of, okay, we'll add another ecosystem service into, the market through an offset credit or some other mechanism. And, at the rate we've been developing those markets, we're not going to get there.
So how do you, what kind of methods do you apply to value those natural assets? Do you have specific models that you rely on?
Yeah, well, fortunately, UN has been working on this, and really creative and intelligent environmental economists have been working on this for decades. And there are ecosystem services, just what was mentioned before, freshwater provisioning, pollination services, soil. All of these various services can have a biophysical measure, and then you can appraise the economic value of it.
Okay.
And so when we look at that, we say, we're sequestering this amount of carbon, which leads to climate stability, and it has a known value. This hydrological cycle and the production of fresh water, that some of it's priced in markets, some of it isn't. And so if we take those values, you can come up with annual ecosystem services that are produced. You can then compute the value of the asset. We're saying that should be the book value of the company, the enterprise value. And then you can have metrics for how that can appreciate over time. And so an investor can say, hey, I'm buying off on this. I believe, whether it's an option to the future, or I just think this mechanism can occur. As we said, finance is a social invention. We often think of it as if it were, natural law, like chemistry, biology, or physics, and it isn't. It's an agreement to agree. And the one thing I think we can safely say today is people are recognizing, and I'll say this, we know the problem, right, across the board, but people have heard that, now what do I do? Okay, I can't afford to go pay too much more for my product. Companies can't raise their prices, particularly in an inflationary environment.
Right.
We're not really sanguine the governments are going to step in the way that needs to be, and they can change priorities. Corporations can't invest too much or they'll get punished by their shareholders, which has often happened. So we need a mechanism for people to realize what they want out of our economy, what they want to see nature. They care about all these things.
Yeah.
And if that investment can occur and we flip it and we are saying, my future, my family's well-being is that forest intact, that ecosystem being restored, that we're building nature back into our food systems, that's something people can get excited about. Maybe they invest a few dollars, you know.
Yeah.
But the real money is going to come from the
The
institutions.
big investors.
That's just a fact. We have to, you know, bring this to capital market scale, you know, to fill the gap, because it's missing trillions. It's not
Yeah.
tens of billions.
And I don't think governments can fill that role. I mean, we see them strapped already for money in many, many cases. This is a very interesting idea. And you mentioned kind of like the underlying methods to value the nature. And so that's natural capital accounting systems, ecosystem evaluations, and the UN has done a lot of work on this. So what's kind of like the current state in that field? Who is using these kind of methods? Do you see a widespread like use by private actors? Do you see use by governments? I'm curious.
Yeah, no, thanks. So that's a great question again. On valuation part, one thing I would like to make it clear, I mean, from the experience and from the feedback which we keep getting from the governments of the world, that when you value share price, for example, only economists can do easily. But when you value biodiversity or damage by the climate or any attributes of the nature, you can't do it alone. Only economics may not be enough. You need to work in the team. Suppose you are working on valuation of hydrological flow. You have to understand the hydrological dynamics. So you have to work with hydrologists. If you are working on biodiversity valuation, you have to work with plant expert. If you are working with the wetland, you have to work with the limnologist. So it should be interdisciplinary. And as you know, each discipline has its own jargon. What is final goods for you may be intermediate good for me. So those kind of clarity and agreement must be upfront. Otherwise, valuation will not be credible. Similarly, we talk about the option pricing. One of the key elements in conservation of biodiversity is access and benefit sharing. You are a pharmaceutical company. I'm a local guy or indigenous person. I can always fool you that, oh, I have the magic phytochemicals. It can give you a new drug lead for new drug discovery. Or you are a company, you will say your phytochemical is useless. I have spent my so many $1 billion on R&D for last 10 years. Nothing has come out. Fact is in between somewhere. So how to create a system where local is motivated to cooperate with the pharmaceutical company so that there is a proper access and benefit sharing in the conservation. Extreme position will not help anyone. Like I will say you are indulging into biopiracy, and you will say you guys are just useless. I'm going to the lab and going to develop a new lead. That is also not going to work. So in biodiversity, too, you have to work as a team and create trust. What I'm trying to say here, that valuation work must be interdisciplinary. And here, there should be a methodological pluralism. Each method should be porous enough to mingle with each other and come out with a solution which will be acceptable to the people. So that is one part. Valuation work, there has been a lot of effort on valuation in last 20, 25 years. And I'm not talking about the academic department or the think tank, but even the practitioner, the governments are willing to use the value, whether it is per hectare value of forest or value of the corals or value of the wildlife. They are being used in benefit sharing, they are being used in cost benefit, they are being used in accounting system. So there is a lot of, I can say that, there is a lot of receptivity to the economic value of nature. That is one. And again, I'm talking more from the government point of view, because in the UN, we deal with the governments, the national government, the sovereign government. On accounting, I mean, last year I was in Yale when Bill Nordhaus and company organized that meeting, Is Growth Obsolete, which they wrote with James Tobin in 1973. So they were celebrating 50 years of that paper. And since then, we have traveled a lot. But I can tell you that today, I don't think at any point in the history has been so much consensus and receptivity to natural capital accounting. Today, 45 countries in the world are using new CI accounts. They are also using inclusive wealth. I mean, we keep getting requests from the member states that let's have natural capital accounting in our country because they have different motive. I mean, but demand is there. They really see the merit in understanding the value of the nature. But please remember, there should be a clarity on what we are talking when we talk about value of the nature. You have ecosystem, you have a structure and the design of ecosystem, then you have the process, then you have the value, and then they have the benefits. Value is directly related with beneficiary. I mean, you can talk about oceanic wave, but unless you have a boat and a human being going there and putting time, those value, recreational benefits are of no use. So please remember, it is related with the beneficiary. If there is no beneficiary, there is no benefit. So, I mean, I keep hearing all kind of values, 200 trillion value, this value, that value. Please remember, valuation must have a purpose. If there is no purpose of valuation, then I think it becomes a statistical jugglery and it is very cryptic, philosophical. You can raise awareness, but that kind of value will never be used by the company, by the government. So valuation must be with some purpose. Now, for accounting, for valuations, in all negotiation process, valuation are being used. Okay. So that is a good thing. So whether it is CBD or biodiversity, or even CCD, land restoration, CMS, migratory species, wetland conventions. I'm giving you all the conventions which we always talk in the UN system. But that is what the guiding principle for the world, basically. And even here, I mean, White House is going ahead with natural capital accounting. I was mentioning to you, they have done a partnership with Australia, Canada, probably UK might join, I don't know. But and then you have other kind of AMSIN, African Ministerial Meeting, Asia Pacific Ministerial Meeting. They all are talking about value of nature, accounting for the nature. And there is a lot of demand from the business, civil society, media, and public at large, who see a great merit in using economic value. Otherwise, we can talk, the nature has immense value, and the next sentence will be, nobody knows how much is the value. So that is a contradiction in itself. So in order to remove that contradiction, or at least reduce the contradiction, we must have the value in place. And there is a great demand. I mean, from from all the governments and the business, we have heard Rich and talking about the merit. But there is I think, but we again, I will go back to the point, Sanjay, that there should be clarity and the communication. I think that is where they are not, in economics, they are wonderful people, but they are not the great, a communicator. So they publish paper, they feel they are doing great. They are doing indeed great. So they have a chair professorship, they are big, but we need to go to the public and communicate. I mean, I'm not saying you become outreach company or media event company, not that. But when you talk to the outside world, you should say what you are trying to convey. Yeah. And we are not, I mean, I take part of the onus, we are not very good in that.
That's hopefully part of the role of think tanks that we're trying to bridge that.
Yes,
for sure.
Yes.
But I agree with you. Rich, I want to turn to you first. If you want to add something on the valuation point that Pushpam said, I saw you nodding a lot. And then second, kind of like your experience, how has it been in in acquiring land for restoration, kind of like some of the benefits and challenges when you talk to investors. I was really struck by your point that you said that you were able to acquire 5 times as much land as some of the conservation groups in the UK. That's pretty amazing. So I'd love to hear your thoughts on this and your experience.
Yeah, thank you. So if we go to the advantages first, the ability to work quickly. If you're the landowner, you can make decisions, you can act quickly. Now, where we choose to act quickly is stopping the bad. When you buy a new landscape, and we have 10 of these in different geographies, climates, topographies, we've got flatland farms, we've got Scottish Highlands, we've got coastal estates, we've got every type of environment that the UK has to offer. The things we do quickly are pulling away the bad. So we remove pesticides and chemicals and we take our land organic. We remove grazing pressures. Right now, the UK has a massive problem with the number of deer across the country, millions and millions that are destroying regenerating woodlands, causing huge amount of damage. So that way we pull back the bad. We get to be the decision maker. It's not as much of a negotiation with an existing landowner. The ability to buy that land as well gives us that underpinning financially that we talked about, which gives the investors that confidence. It also makes it real for investors. So as Pushpam mentioned previously, we can talk conceptually and about ideas and frameworks. And Doug's previous answer to that, he absolutely described the future that the next generations are going to live in. Those accounting approaches and mechanisms about how every business is going to be governed and run in however many years, I just hope it's real fast. But in the interim, we're able to do positive things and motivate investors to actually purchase this land because they can see it, they can touch it, they can feel it. I literally returned yesterday from one of our sites in Norfolk, which is English flatland, farmland, and we took the whole team diving and swimming in lakes and things there. So if you can experience that environment, it excites people to want to be involved and do it and work with it. So there are a lot of the good things. You asked about the challenges. Literally everything. It's incredibly difficult. Managing public relationships, managing access. So in Scotland, for example, there's a widespread right to roam. Anyone has the ability to walk anywhere they wish on any privately held land outside of the immediate curtilage of a private house. But that means you're dealing with wildfire risk, you're dealing with fly tipping and unsociable behavior and bothering animals and things like that. So you have to manage that in a respectable way. You have to solve hundreds of problems every day because each one of these estates is an individual business. It's an agricultural business. It's a property management business. We have ecotourism visitors. We have energy challenges, all these type of problems. So every single bit of it is difficult. And that's the gap we haven't bridged yet. So we've got amazing minds looking at the economics and the systems and the processes. But changing the people on the ground that go from managing land in traditional ways. Now, bear in mind, we're not dealing with indigenous communities and land that's held that way. It's all private ownership in the UK, outside of crofting and common use, which is kind of an element of that, but very small. The people that are running these estates and managing them, they don't exist yet. These are new jobs and systems and ways of working that we're having to coach people and teach for the first time. A traditional land manager in Scotland, for example, would be employed and paid to kill predators, and that means everything that isn't a grouse or a pheasant that they can then go back and shoot. They're paid to burn the hillside, so it is an environment that's better to go back and kill grouse and pheasant. Whereas we're turning that on its head and we're making people custodians of landscapes that are not killing things anymore. They're reintroducing species and planting trees and taking out fence lines to allow nature to connect and be bigger and better together. So the positives are that we have to do it. The negatives are the reality of doing it. It's incredibly difficult.
No, this is really, really enlightening, very interesting. We're going to turn to Q&A in a minute. Just 2 very brief questions, one for Kelly, one for Doug. Kelly, you, because a big role in this is really the investor, right? And so I think, and you're a specialist in like investor behavior and how markets actually work when we look at the people behind them. And so you have written a very interesting paper where you look at kind of like, that when you look at the most widely used approaches to sustainable investment, that pushes polluting firms actually to emit more greenhouse gases. So can you talk a little bit about that and how that applies to this debate here? Because I think that's a very interesting finding.
Sure. So I've done research that is somewhat takes a critical view of how sustainable investing has been implemented in practice, although I certainly support the objectives of the sustainable investing movement. For the vast amount of the money committed to sustainable investing has been toward divestment or negative screening, or basically ways to punish firms that are currently high polluting and reward a set of firms that are currently low polluting. And what I identify as a problem with this approach is, to the extent that you are able to push the high polluting companies closer to bankruptcy or make it very expensive for them to access capital, well, that actually leads them to shy away from many of the exciting technologies that are now available for them to invest in to make their production more efficient and more environmentally friendly. So for any firm with kind of a long enough perspective, a long horizon perspective, it could actually be quite profitable to transition toward greener production. But that often involves quite expensive upfront investment. So to the extent that a firm is just struggling to survive, they're going to shy away from these opportunities. Okay. So what my research has argued is I take a much more positive view on this growth of transition-oriented portfolios. So transition-oriented portfolios involve strategies that they don't divest away from high polluting firms. Instead, they purposely invest in the set of firms within high polluting industries that are making a clear effort to improve their environmental impact.
That's interesting.
So what I would like to see more of is, you take a firm that is high polluting, let's say emitting, let's say 1,000 tons of carbon per million revenue. So this is really up there in terms of negative environmental impact. If that firm cuts its emissions by a mere 10%, that is far better than getting a bunch of services companies that didn't pollute in the first place to move their emissions further close to zero. Okay, so I would like to see some more reward for this incremental improvement. And I see that general philosophy is actually being rather aligned with basically markets for natural assets. Because what is a natural asset? It's an asset that could potentially actually pollute a whole lot. Okay, so I would also almost view fossil fuels as valuable natural assets. And we want the people who would do good with that natural asset, including possibly just buying up fossil fuels and doing nothing with it. Okay, I would like to see a lot more of that, and that being priced in a market way, instead of saying we want to have no association with this asset. Okay, because I don't want it in my portfolio as kind of a sustainable investor. I would like for us to take that opposite approach.
That's actually a really interesting point. And I think the natural asset companies could really come into a portfolio like that. So let me conclude before we go to Q&A. So what are your efforts currently with natural asset companies? And are you planning on listing it somewhere at a stock market? I'd love to hear what the current outlook is.
So we're currently working on a portfolio of natural asset companies. We have one indigenous-led that is about 1.6 million acres of land, and the tribal corporation wants to be able to continue to operate the way they have and conserve for thousands of years. And this would be a company, a natural asset company. We're going through a private placement process right now.
Okay.
So we would have our initial investment and then bring it to a trading market in the not too distant future, and both public and private. We're working with a country in the Caribbean that wants to use a natural asset company to manage and increase their conservation lands under protection. And we're working with some major CPGs to use a natural asset company to convert their supply chain in a particular product line, starting off with kind of a pilot of 75,000 acres up to about 2.5 million acres. So it's very concrete uses, investment going into it, and allowing the natural asset company to have proof of principle in the marketplace.
Great, wonderful. All right, I mean, we have these experts here. I would really love to hear some audience questions. Two of my team members are walking around with microphones. Please, the lady in blue.
Yes. Hi, thank you for your presentation. I have a question. You are discussing about the risk of the investors But I'm a little bit surprised that you don't discuss the risk that the owners, quote unquote, of the ecosystems will face, including the indigenous people, the governments, and that's mostly in developing countries. So, because if I'm indigenous people, I don't know what you're going to do with my resources. I don't know who you are, right? So, I think we are coming back to many years that the exploitation of natural resources was something that the world will benefit from, but developing countries have no benefit from that at all. And now you're talking about is investing in natural resources. So how can we make sure that the developing countries will benefit from that? And that you will not leave these countries and ruin after you have made your returns or recover your returns or acquire your returns. So I'm very worried that is most of the discussion about the return for the investors. But what about the risk? What about the other side,
Yeah. No, I think this is a great point. Doug, you want to take it first, and then Rich, over to you?
So it's a great point. And the owners of those assets are the governments and the people. And so when we put together a natural asset company, part of the charter provisions was they're the owners, they're the issuers of equity. So the investment just liberates that asset to be financial capital for the benefit of those owners. So where there's land title, that's easy. Where there isn't, it becomes more complex. But this is incentive because they have been good stewards. I say the Global South largely has protected huge areas because they just haven't developed in the same way. And they've rightly turned, to the more developed countries and said, wait, you're telling us to stop and not develop? We saw it recently in Guyana. The Prime Minister came forward in a interview, I think it was with Financial Times, and he said, we're going to develop our oil resources and do these other things because no one's paying us for the forests and the things that we've been providing as a world good. So our approach, until you have that investment that liberates that and creates wealth for that country, we've seen what sovereign wealth funds can be from extraction. Norway with its sovereign wealth fund, the largest in the world. There's a green wealth that if we can bring it to the market, that can be the financing for livelihoods, for developing a circular economy from the beginning, not make all the mistakes we've done in the industrialized economy, go directly to work with nature. So we made certain provisions and protections within the charter of the natural asset companies for benefit sharing and to make sure that those resources aren't just removed and the benefit doesn't just come to the investor, but to all. Because remember, they're the asset owners. That's who's issuing, the equity and is participating, would be the majority owners. In the case of our indigenous NAC, they're 100% owners of the NAC. The investors come in and they take a small percentage, and that small percentage of their investment liberates a very large asset. So that's a way that you can create wealth directly for those asset owners and reward people that have been great stewards over a long period of time and be able to finance livelihoods. Because at the end of the day, if we don't have livelihoods and people don't look at that forest or that marine system as a source of not only food and fiber and material, but also wealth creation, it's not going to work. There's no way we can't have to, we must include people and the communities into these new economies. What Rich was saying, bringing new types of jobs, protecting, restoring, and growing. That's what the financial bridge of natural capital can do in these environments.
Rich, how about you? How do you guys think about community involvement? You mentioned that you have a lot of buildings on your land, that people can live there, work there. How do you view that perspective?
So a key distinction to bear in mind, so we're UK based alone. We don't have indigenous communities in the same way. The only land we acquire is from an existing private landowner who is a willing seller and wants to exit a property. So it's a very different situation to the one Doug just beautifully articulated.
Okay.
There's a hard reality of conservation in the UK that people don't like to admit. But previous landowners were custodians of the land when we've seen it degrade, when we've seen the trees go, when we've seen the hills burnt for grouse shooting and pheasant shooting, when we've seen the land heavily extracted. These aren't good landscapes. But the narrative is these local communities, previous landowners knew best. They did of a sort. They did the best they could with the land with what they knew. It might have been heavily farmed for industrial agriculture. So what we have to do is give back to the land. And any genuine natural capital-based approach has to be additive. It's not extractive. So if you imagine an estate that we buy, got a beautiful one in the Scottish borders, but you go there and it is barren. All the trees are gone that should be thick forest and woodland everywhere. The trees are gone because people wanted to farm it, they wanted to shoot things, and they wanted to clear it. So what we leave there, if we ever leave that landscape, will be way more trees and it'll be restored peatland. So natural capital has to be additive and restorative, or it isn't really a natural capital investment. It's something pertaining to be that. Now, in terms of community involvement, it's still really hard. So yes, we try and bring jobs. We try and provide homes. We try and leave a better environment and landscape. We try and make land more accessible while balancing that conflict between us as people are the worst invasive species. We put too many people in a place, we will damage that environment. There are some habitats that are just too sensitive that you have lots of people there, it causes problems. So you're always balancing that tension, but we try and include people as best we can. The real problem is, though, when we talk about local people, no one ever really defines what they mean by local. Do they mean people living in a place? Do they mean a mile away, 100 miles away, 1,000 miles away? And also, I don't know about everyone in the audience, but myself, my wife, and my children all have different views on things in our own homes. Why on earth do we think people in a local community all think the same thing? So if 4 of your neighbours think 4 different things, your only way of making them all happy is to do nothing. So we have to have these difficult conversations, and ultimately, that's the biggest advantage of land ownership. We can be respectful of those views, but sometimes we can choose to disagree and try and put the environment first.
That's a really great point and a perfect way to stop. We're out of time, but I want to give a big round of applause to our panelists. Thank you so much for taking the time today. Yes. And please feel free to come up and chat with them afterwards. We're still sticking around for a few minutes. Thank you, everyone. Thanks, Rich. This was wonderful.